Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for May 11th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Looking at this time frame, you'll notice that price is holding in a very narrow range. And this is after coming out of a narrow range. And after coming out of a narrow range, we basically have very, very quiet holiday-like trading behavior. We're trading about just over 12 handles on average per day on a 10-day average basis. Anytime you're trading around 12 handles and even into 15 handles per day, that's very similar to holiday style trading, summertime trading, those types of events where price is just coiling up, maybe awaiting news type thing. So this is very, very quiet behavior. It's very difficult to do anything on an intraday basis, so you have to be very, very diligent about trade location and about risk management. The only opportunities we've talked about in our trading room is defending 88.75s basically, day over day. That's basically been it so far. And that's been the only trade of the day. And right now, that level continues to be the major pivot in the charts. Price continues to hold above that zone. And I mentioned before, if 88.75 fails to hold, there could be a swift move or a quick move right into 76.5. And that could still offer an opportunity to defend and buy. This market has been on an upward trajectory here, and more upside is likely to be seen here as we continue forward. But there are key levels to watch, and if there's any failure to hold 76.5, then we start to make our way downward toward 53s and perhaps 48s and down the line. But we're still in an upward trending market, so all major pullbacks are still buying opportunities until proven otherwise. Until the market can find acceptance above 2400, we're not likely to see those upward extensions, but once we do, 2424 and 2459.75 are the next upside targets. Looking at the intraday time frame here, again, we've been mentioning in our trading room that 88.75 into 90 has been the zone to watch. Yesterday there was a trap. 88.75 is right here basically. That was the low of the day a couple of days ago. Two traps below, a pullback and a hold. And when we were looking for more strength, the idea was that we would likely top out at 97 to 98. That was the zone to target, and 97 became the high yesterday. So there's not much room here to really run. So you have to be quite careful. You have to be very diligent about that, about your trade location. Again, we're still looking at prices into 88s being defended. So price comes down. Now that we have the previous session's low at about 88.75, that could be a trap into 87s for an attempt to return this thing back to 95s. So that may be the opportunity to watch for here today. All right, let's take a look here at crude oil. Now, crude oil has seen some significant movement here. We've talked about last Thursday and Friday how we had a significant sell-off and then an even more significant rejection and reversal. That was huge. So big day down, a big reversal day here. This was, for all intents and purposes, our rejection day. And what I mentioned was pulling back into this zone here would offer an opportunity for bulls to defend. You'd likely see absorption. And the idea and the goal was for price to come back to 48.75 on the high end, or on the low end rather, and then rally as high as 50.20. So that's the zone right here where we're likely looking for price to head toward. And we're very close now. You can see we've seen a push into the previous month's low now after taking it offered here. So a very nice push up. We got the breakout yesterday and a stop run day to the upside. What I mentioned to our room here is that now this level, about 46.90 to 46.80s, that's the zone where if price pulls back into that area, it allows swing bulls to defend yet again for another attempt at new highs. So should a return back into 46.90 occur, 47 evens perhaps, that could be a fantastic area for bulls to defend and continue to squeeze higher. If we take a look here at the intraday time frame, there it is. You'll notice again, very, very big push up to the upside the previous session and a big rally. And this all occurred right on the EIA report here. That big move right there left behind a significant LVN, both in the day time frame and in the 5-day profile. That's the LVN I'm talking about here as a significant LVN to remain intact. It spans into about 47. So again, the market structure here, very, very strong. You can see the pace and the intensity of this trend. At the moment, the FOMC key level is 47.65s. A pullback into that zone may be defended here, but we have that S3, 47.41, and climbing right now. Everything still points to upside trending behavior, and the first pullback, perhaps into S3, could be the opportunity to continue to shift this thing higher. So again, pullbacks likely to be defended. We are seeing some pinching of the bands, which implies increased volatility likely to come. 48.75 is the big time target to reach to the upside. So any pullback could be an opportunity to buy into 48.75 as the day progresses. All right, let's take a look here at gold futures. Here's a look at gold in the higher time frame. So if we're looking at the daily time frame of gold here, what we've been talking about was a continuation downward toward 1200 to 1205. We've seen a downward price discovery phase here, rolling back down. We've seen previous highs be rejected time and time again. That's been our cue that this thing may head lower. And so far, we have not been able to reestablish above prior resistance. I mentioned you're likely going to see price continue to roll lower as long as price remains below 1240. That's been the case so far. Yesterday we had an inside day, and we're currently seeing a little bit of a rejection of the previous session's low, still kind of a very narrow 3-day range here. And again, a pullback perhaps into 1232s, 1230, as I mentioned the previous session. That could be an opportunity to trap still for a continuation into 12 to 1205. So still looking for further downward price discovery until price can reestablish itself back above 1232. If we take a look here at the NQ right now is seeing some selling pressure at the moment. You can see this is a very narrow range. 3-day range, very, very narrow. If we were to quantify that down here, we can bring this down to 3 days. Click OK, and you can see there is a magenta bar there. That means it's below 65% of average range over the last 10 3-day period ranges. So right there, very significantly coiled. This isn't a finish day, but very, very tightly coiled. And again, very similar to the ES, the NQ is trading a very narrow range, only 35 handles per day, which is quite shallow, quite low for the NQ. But overall, it's been an uptrending market. So pullbacks still to be defended. We have this as a key level right now, 56.50. And if there's any failure to hold below 56.50, it could be an opportunity to buy and continue this thing higher. Otherwise, failure to hold or remain above 56.50 would imply a retest of those 5600s. 5600 is very, very important and has remained support. So should price pull back to any magnitude into that area with the rising PIMAs stacked and sloped into that zone, it could provide another opportunity to defend. So right now, NQ has been very, very bullish. All pullbacks have been buying opportunities. Failed new lows have oftentimes been a great buying opportunity in an uptrending market. On an intraday basis right now, we are seeing some weakness here set in the NQ as we're speaking. Again, approaching the 56.50, we're now below the previous session's low, as you see. And again, anytime you're in an uptrending market and price pushes below the previous low, you have to be able to establish acceptance below that low. If there's any failure and price pops back above 56.58, there could be an opportunity to defend and trap back toward value, which is 56.72.5. All right, that's it for now. Let's see how this thing plays out the rest of the session. Good luck and trade well.